This week's obviously pretty big.
Biggest week of crypto.
So the ETF deadline is actually this week. By the time this episode comes out, it's highly likely that we will have a decision on that. A lot of people are speculating we will get those Bitcoin ETFs approved.
They've released their fee schedules of all the different products and what they'll be charging, so you got to be close to the end.
Alrighty guys, welcome back. This is the first episode we've recorded in 2024. Officially the second episode that's come out, but yeah, Happy New Year everyone. Hope everyone's having a good start to 2024. Pav, you're back, mate.
Mate, we're both back. What are you talking about?
Well, yeah, but more importantly, you're back.
Right, sure.
How you going? How was your break?
Mate, it was good. Lots of time spent with the family. Went to the coast. Gold Coast, that is. I know you went to the North Coast.
Yep.
Did. Yeah, just lots of family time, lots of pool time.
Yeah, get a tan.
Funny. But yes, I did.
Yeah, good. Well, at least that makes one of us, because I certainly did.
Yeah, how about you? Good one? Any good presents?
Yeah, good prezzies. Wearing some new kicks from the missus' parents, so yeah.
Oh, that makes me happy. Now we no longer have the same sneakers.
Yeah, exactly. I'll still wear them. Reeboks every now and again. But look, I wanted to call out, we had that episode with Investified that was a bit of a 2024 prediction.
Yeah, that was
episode.
a gem.
It was a nice one, wasn't it?
Yeah, it was good.
We recorded that prior to Christmas.
We did.
And I've got to shout it out, mate. You called out Say as a coin you're watching and something that's going to do big things. And in the time since then, I think it did 2x.
Yeah.
100%.
Short term, yeah, I don't know. Long term still, I think there's more to it.
Of course.
But
yeah,
that was good.
It's a good look for...
It's a good look.
Yeah. But anyway.
That was good.
This week's obviously pretty big. ETF deadlines.
Some say the biggest week of crypto.
Some could say that.
It's like Bitcoin's birthday, and we've got the ETF.
Massive. Yeah. So the ETF deadline is actually this week.
Yep.
So by the time this episode comes out, it's highly likely that we will have a decision on that. A lot of people are speculating we will get those Bitcoin ETFs approved. But obviously we can't really guarantee that now. So what are your thoughts leading up to that kind of decision?
Yeah, I think it's definitely in. I think for me, it's like the SEC would have been going to the length of like all the technical questions that they were asking a few weeks ago, unless they weren't serious about this is there. And even like previous, like that Bloomberg analyst, I forget his name, James Sunlessea or someone. Yeah, just the fact that structurally it's not too different from the futures ETF, which is currently live and running. So, yeah, I mean, for me, and there's all those ads are running on TV right now. I think most recently we're going to shoot it up a bit later in the episode, but they've released like their fee schedules of all the different products and what they'll be charging. So, I mean, you got to be close to the end of this all just going green soon. Yeah,
I mean, there is the futures ETF. I think this one's a little bit different. You're a bit more across the technicals of it, but to break it down, essentially, the spot ETF, why it's different from a futures ETF, is the asset managers or the ETF is actually holding actual Bitcoins, right? Which means they need to invest in the Bitcoins, which, impacts price, which is a bit different from futures, which is just paper contracts, right?
Yeah, it's like cash settlement. So like we promise it's the price of Bitcoin as opposed to, oh no, we've got Bitcoin in the shed.
Yeah.
That's kind of the difference.
Cool. So I want to kind of make a comparison because we've spoken about before, like the gold ETF that went live in 2004. Pretty interesting that you couldn't really access gold via a fund before 2004. Like, would the only way be through like I guess
physical
holding
gold
it physically or having someone else hold it for you?
Some other custodian, but not on an exchange.
Yeah, exactly. And I want to bring up a bit of a chart that shows the gold price after that ETF went live. So here we see that it went live in 2004, and since then the price of gold hasn't actually come down since that point. So I think it was about $450. This is based on CFDs on gold, and it shot up. It had a little bit of a dip for a period there, but it did about 4 or maybe 5x since then.
Multi-year rally.
Yeah, exactly. So it's a little bit different to Bitcoin because Bitcoin's a bit more accessible than gold. You can do a little bit more with Bitcoin, and the scarcity is a little bit different as well. Like we have the halving coming up where new Bitcoin supply is going to be halved. So obviously that impacts the supply and demand side of things as well. But yeah, I think this is a good reference point to see how like a spot ETF could impact Bitcoin in total.
Yeah, absolutely. I think it sets up the long-term narrative pretty nicely. And I know we're going to talk a lot about this, so I won't touch too much into it. But yeah, I think for me, 2024, the fact that we've got this happening with Bitcoin, the ETF, accessibility is now opened up for a lot of people that can't currently access it, for all the points you said. And then two, halvening. I mean, two major catalysts in a single year. It's massive. Yeah. And they've got things like the macro improving, like the Fed likely going to start reducing rates, bit of quantitative easing instead of tightening. Like it just seems like it's going to be a huge year.
Yeah. Did you mention the election?
Yeah, election year, as well, which historically has been an up year in the last 20 years, 20 previous election years. Yeah.
Yeah, before we dive into kind of your charts here, I just want to touch on an interesting development. So the asset managers that are offering the potential ETFs have released their fees.
Yep.
And it's pretty interesting because like they're quite cheap compared to what people were expecting. Like they're kind of similar to what some of the gold ETFs are currently. And I guess that's important because this is new, this is fresh, like people want it, you'd think they'd pay a premium for it, but because there's so many asset managers offering it and they're trying to gain as much market share as possible, it's super competitive and those fees are actually quite cheap. So you're looking at, I think the cheapest one there is Bitwise. Would you be able to explain like the fee structure for ETFs a little bit more? So obviously there's a fee for your initial purchase, but then there's like a rollover fee for holding them.
Yeah, I think, I'm not sure. Like I have to double check if that is the case. We might touch back on that next episode. But I mean, at the end of the day, it is like definitely throwing the gauntlet down to say that, something like this is, it's almost like a challenger product to what currently exists. So there's a lot of centralized exchanges where the fees are quite a lot higher than what that's sort of listing as. So I think one thing this doesn't take into account is that it will be a live, exchange traded product. So there will still be spreads.
Yeah.
So we don't know what the impact of that's going to be, what the liquidity is going to be like.
Yeah.
Some of these funds might be a lot more liquid than others, so the spreads could be quite smaller. But then you've also got the brokers and the issuers. They also may be potentially having different liquidity as well. So, I mean, there's a lot more to unpack. But, I mean, what's key, I think, like as you said, like it's coming out of the gates as what seems to be a pretty competitive product.
Yeah, and I guess the consumer's a real winner at the end of the day. But you got to keep in mind, like, asset managers like BlackRock and Fidelity and stuff, they're going to win from this. So, like, either way, long term,
they play to win.
They're going to win in some way, shape, or form.
Yeah.
But Pav, let's get your thoughts on the market, mate.
Yeah, I mean, it's been an interesting one. I mean, we've been away for a while, so we haven't really been able to talk too much. I mean, Bitcoin's just been doing some pretty wild things. Everyone got a bit worried back here. The start of January, the 3rd, we had a massive flush where price from the previous day was 45K and then fell about 10 to 11% all the way down to 40K. So on Bitcoin, that might not look so bad, but a lot of altcoins were down 30, 40%. It was a bit of a massive red day. And reason for this, I mean, there's a lot of reasons why, but I think the leading reason is a lot of the futures products, the derivatives, the exchange-traded derivatives, they were running at extremely high open interest rates. I know we finished up the year, you talked about open interest being at the highest it's ever been.
Yeah.
That's a very, very precarious stat because that means there's so many people that are just borrowing against their positions, paying fees, and there was always, I guess, that sort of flash sort of crash coming at some stage. So it's good that we've had it before the ETF because now all the funding rates have normalized. So it's like the interest rates that you would pay on borrowed positions. So it's almost like a credit flush. So everyone's starting square. I think a lot of people would have lost some unrealized profits. So it goes to show again, if that happened to you, like definitely sit down and think about how you're going to look to take profits again with the next runs that might be coming. But look, for me right now, we're at a pretty key resistance area, and you can see prices respecting this at the moment. So this is a previous high from 2022. And yeah, we're just about to tickle the top of the March 2022 high. So that's a significant one that we've pointed out in the past as well. That's the last high before the market really broke down and started the bear market. So getting above that, I think, will be a pretty big sentiment shift. Closing higher above that means that, we're moving into a more bullish sentiment. There might be a pullback to come further, but the fact that we're getting up above that price is a pretty big deal. So yeah, that's kind of what I'm seeing there. And then just to show as well, we talked about Bitcoin dominance being something to watch. Like we can't really see a sustained altcoin rally until this guy rallies and then falls back away. So we have seen with that flush that we did see, last week, this has been on the rise. So what that tells you is two things. Money is, I guess, somewhat staying in Bitcoin, and altcoins are selling off into Bitcoin, or altcoins are just being decimated, and the majority of the total cap that's remaining is shared by Bitcoin alone. So you can see here previously pre-halvening last cycle, there was a couple of key market structure breaks that then led to the subsequent altcoin rally. So we haven't really seen any weakness on this yet. So I would say, like, while altcoins may outperform in the market right now, it's very selective. Like, it's not going to be every single altcoin is going to go ballistic. Exactly. So
what are you looking to see, like, from a percentage standpoint on the Bitcoin dominance chart? Like, when you look back to the last cycle, the Bitcoin dominance was way high. We probably won't see those levels again because there's more altcoins and more money flowing into altcoins. But do you have a certain number in mind? Like, is it 60% Bitcoin dominance?
It could be. Like, I mean, if we're purely looking at technicals, I really like 60%. It's pretty much a nice sort of inflection point here, a key level. So I wouldn't really put too much TA onto something like Bitcoin dominance, but what it tells me is that it's looking strong still. It's not looking like it's looking to turn around just yet. So until this starts to look a bit exuberant, looking like it's sort of sliding, that's when I would say we might see a longer term altcoin market start to develop.
Cool. But and for the listeners, so we're sitting at about 55% Bitcoin dominance, and Pab's mapped out a key level at about 60%. But like you said, TA on Bitcoin dominance isn't always the hottest.
But it tells a story. It definitely tells a story that there's still a bit more to go until we have that fully fledged altcoin rally to come. But what we also do have is we've been tracking this as well, which is the total market cap of the crypto market minus Bitcoin and Ethereum. So this is just altcoins again. We pointed out about a month ago that this was breaking a pretty significant level, and we've seen a rally and a fall, which was that sell-off we talked about. And now we're potentially seeing a bit of a bounce back. So at the same time, we could see a short-term rally for this market cap to go from 480 bill, up to 600, 700 bill valuation. So what that means is we might just, in the short term, still experience, especially with Bitcoin running right now, as soon as it starts to pause, go sideways before any sort of sell-off occurs, there will be a capital rotation likely that does go to altcoins. So wouldn't be surprised if we see some sort of silly season before the halvening, and that might attract a lot of people back, but it might also be the worst thing that people do, get too deeply invested into altcoins too soon. So all this would sort of say to me, if this is my portfolio, like I'm still looking to have altcoin exposure, but I'll be looking to take profits probably as we start to move into this sort of trouble area, especially leading up to the Bitcoin halvening, which we've seen has been a pretty big catalyst, and the market tends to do some wacky things the closer we get to it. So just want to point that out too. So it's an interesting looking market for 2024.
It is.
Not bad.
It seems like to start off the year, we're really shifted the focus back to Bitcoin, and that's likely going to be the case, especially as we have the ETF approval and then another catalyst in the halving. A lot of focus will be on Bitcoin, and then we'll likely shift back into altcoins. We'll probably get an altcoin summer if you're in Australia, altcoin winter. But we'll see what happens. Let's dive into some of those top movers.
So what
there's not many, is there?
No, it's not. But this is good. Like, this is kind of my favorite time to start looking at what's performing in the market, because like we said, we did have that massive flush. A lot of alts got decimated, so it's only really the strongest that are showing these decent gains. And what we're seeing again, and we've called this out like quite a few times, infrastructure tokens. So like your layer ones, your layer twos, they seem to be performing the best. One that's notable for me is STX. We talked about that with the Investified guys on the predictions podcast. Stacks. So Bitcoin network layer 2, especially with the advent of ordinals, BRC20s, the whole narrative on like NFTs on the Bitcoin blockchain, and the future of potentially DeFi moving into the Bitcoin blockchain as well. I feel like the layer 2s on Bitcoin will be a continued narrative, and it seems like the market is thinking the same. So that's up 23%.
So I just want to call out, so for all the listeners, we're looking at bubbles of, like gainers and losers.
Yep.
Pretty much everything in the altcoin market is red, so it's gone down, where there's a handful of tokens that are in the green.
For the week.
For the week, yes.
Weekly performance.
Yes. So are you essentially saying your strategy is to look at the ones that are performing in this tough market and pick those as like stronger competitors to some of those other ones?
Absolutely. This is key. This is exactly how I build my watch list personally. Yep. So like I'll then add all these top performers onto a watch list, and I'll sort of see what we just saw one absolutely blow up.
See a coin.
Yeah. That could just be a pump and dump. But anyway, it doesn't matter. That's exactly how I'll do it, and then I'll then go and apply TA to those as well. But I mean, you want to average winners, generally speaking, and from personal experience, in these type of market conditions, not really try to catch the bottom of something that's falling. You want to ride the coattails of something that's showing strength. Tends to have that momentum. That's kind of what you want to see.
Yeah. So some of the ones that are in the green currently: Celestia, TIA, Astar, ASTR. Stacks, which you mentioned, Osmosis, which is a DEX on the Cosmos, in the Cosmos ecosystem, Lido DAO, so liquid staking. What else are we seeing?
Got Injective Protocol, which we've been shouting out a bit towards the end of last year.
Beam, so the gaming narrative there as well.
Yep.
And Arbitrum, so layer 2.
So it's all happening.
All ones we've spoken about pretty frequently in the past, haven't they?
It is. Yeah. But this will change, obviously, as the market hopefully stabilizes. We might see a bit more conviction across some other asset classes. We might see some sort of resurgence into other sectors. I know we're all waiting for things like GameFi and NFTs and stuff like that to start to take off as the sort of market matures into the next phases of the cycle. But right now, it looks like infrastructure is a play that is seeing the most rotation. So that's how I'd probably look to play it personally in the coming weeks.
Yep.
But what I also would point out too is I think we've talked about this before, fear and greed. We're at the highest level we've been at since the bottom. So we're at 76. So we've just moved into what's, I guess, perceived now as extreme greed. So this is where the market still gets a bit frothy, but it can be quite good after a big sell-off to see that greed factor still there, because it means that there might still be that, that sentiment, that momentum to take us to the next move. But all I would say is for the next move is very volatile and very quick. That might be potentially some sort of local top.
So this is measured from a few things. It's like social sentiment.
I think it's
market cap,
volatility, momentum, social media, surveying, dominance, and trends. So little bit of, I guess, qualitative and quantitative. So it's an indicator. Like it's not a Bible, like something you live and swear by. But it has
what's interesting, because we just showed those top movers and everything's pretty much in the red in terms of the altcoin market, but because like the Bitcoin ETF approval is on the horizon, like everyone's getting super excited about that. So that probably just shows why that fear and greed measure is so high.
Yeah, it's definitely still some interest in the markets, just what we like to see. What's happening with Gary?
Cool.
How's about your best friend?
My best friend, DJ Gary.
Are you going to be sad that you won't have anything to talk about?
Well, I'm sure he'll find some things. But I reckon this is his last hurrah because I reckon the ETF, if it's approved, which it's likely to be, it's going to be a big defeat for Gary personally. So he's come out on Twitter and just put out a thread of basically saying.
So Gary Gensler, sorry, just to simulate everyone.
SEC chairman.
Yep.
SEC is Gary and the SEC are pretty famous for being anti-crypto. Come after the likes of Coinbase and Ripple and stuff like that.
Every other crypto under the sun almost.
Yeah, they don't like it. But he's basically put out, a huge thread of tweets, essentially warning people against the risks of crypto, saying, there's risks of scams and it's volatile and all things like that. A lot of people are just taking this as the ETF's confirmed. He's just having his final say before it is confirmed.
Yeah.
Which kind of makes sense. I kind of see that narrative as well.
It makes sense. Like a lot of institutional guys were staying away from crypto because they couldn't possibly access it because of the way it exists currently. So, I mean, having this ETF will overnight change the security.
Yeah. I mean, he makes valid points. Like fraudsters continue to exploit the rising popularity of crypto assets to lure retail investors into scams.
Which won't happen with an ETF because you can't withdraw it.
Yeah, exactly.
Yeah.
Except
you could be Ponzi'd into buying a fake ETF.
Yeah, you could.
Yeah.
I'm sure that will be hot on the horizon.
Yeah. But no, it's an interesting one.
Yeah.
Good on you, Gary.
Good on you, Gary. But yeah, I've got another quick story here. So it's a little bit left field from all the ETF chat we've been discussing, but Visa, it's not kind of their first venture into the crypto Web3 world, but it's just another little, finger in the pie, I guess you could say. They have launched a Web3 loyalty program. So you can basically earn digital or unique digital collectibles and assets through, completing online purchases and completing online activities, whether it's, checking into an airport or liking a brand on social media. And it's just like an app where you can do a lot of that and earn some pretty cool prizes and gifts and unwrap them and things like that. So, I mean, it's just another adoption play, isn't it? Visa, pretty famous for being involved and wanting to, be a leader in this space. So this is just a continuation of that.
The one thing we can't not talk about, I guess, properly with all this ETF stuff is like, I feel like everyone's heard the ETF in the socials months and months and months. Maybe a lot of people don't quite understand why it matters. Like, why should the everyday Aussie or crypto investor give two shits?
Yeah.
What's your hot take on like that? Why do you think this matters?
In terms of like direct impact, like, if you hold Bitcoin in your SwiftX wallet or in any other exchange or in your personal wallet, like that's staying the same.
Yeah.
It's not moving anywhere. I think the price will be impacted by this in the short term, but more predominantly in the long term. And my personal opinion is for the better. I think this will bring in a lot of institutional investment.
Yeah.
Like we're going to see billions of dollars come in because there's been a lot of institutional demand for Bitcoin, but there hasn't been that regulated avenue to access Bitcoin.
Yeah.
So I guess we've got that now. And so, yeah, I think if you're an Aussie investor and you've hold Bitcoin and maybe some other cryptocurrencies, it's a good thing. If it's rejected, obviously the market could tank a little bit.
It's not expecting
like
that.
that's not. Yeah, I mean, we don't expect it, but it's not a question.
The market's definitely priced in expecting it to be going through. So if something doesn't go through,
exactly,
it could get gross.
Yeah, exactly. So in the short term, I think if it's approved, we are going to see a spike. I don't think it's going to be a direct sell the news type event because it's just one of the biggest events. It's probably the biggest event we've had in crypto for a couple of years now, right? And yeah, we've had some positive price movement over the last few months, which could indicate that it could be a sell the news event. But I think with all the institutional money on the sidelines ready to get in, that's going to push the price higher to maybe like a 55, 60K bracket. And then we might cool off leading into the halving, which is about April, May, sorry.
Yeah.
And yeah, so I think short-term positive, long-term even better. But yeah, don't get too kind of overzealous with these things because smart money will take profits at some stage.
Yep.
What do you think, Pav?
Yeah, I think the same thing. I think this is more of a long-term win for me. And I don't know, my biggest thing is once the Bitcoin ETF is like digested by the market, like whatever happens up or down, a couple months from now, I think we'll start seeing things like the ETH ETF go through, like maybe in like May, June. I think that's when the verdicts are due for that one, the final decisions.
Yeah.
And then I'm just thinking, God, what's next?
Yeah.
I'd love to see a Solana ETF personally.
Oh, wouldn't you just?
Yeah. So just increasing again the avenues for diversification. I think that'll be the next move by institutions. But yeah, I mean, short term, we don't know what could happen. I'm planning for both outcomes. So like, what if we just absolutely rocket it? All-time highs. What's going to be my plan there? Yeah. But I'm also expecting, what if we shoot into that 50 to 60K market start to look a little bit like everyone's taking profits? I'll probably do the same as well. Yeah. In a more meaningful way. Because I just know historically the halving's always had a bit of a sell-off leading into it. So I want to be there ready to buy up a bargain.
Ready to get in. What would you used to say to someone considering whether to get into the Bitcoin ETF or whether to buy Bitcoin directly and hold their own coins on, say, an exchange and then move it to another wallet?
It just depends on what you prefer. You can't go wrong with either option as long as your goal is to get exposure, you're going to get it. Yep. But then what most people find is they start with Bitcoin, and you might resonate with this. I know I definitely do. You start with Bitcoin, sort of get to understand the lay of the land, what crypto's all about, and then you start to see, there's an altcoin here that I really like. I think they're doing great things. Like I know we've been talking about things like Helium and Hive Mapper, where they're actually looking to establish real world use cases for the crypto coins. So I know we'll probably talk about that some other episode, but like everyone do their own research after a while. They just can't help it because you're curious, right?
Yeah.
And then you'll just be like, okay, well, I can't really do that on an ETF. I'll have to go to an exchange.
Yeah.
So I think that's where they'll need to be both. But for institutions, this is the biggest one. I mean, there's a lot of client money that a lot of money managers and funds, they haven't been able to, provide crypto exposure. I've got like a great survey here from Bitwise, which, they are one of the contenders for the ETFs, but they did a collaborative piece with Investified to sort of benchmark 400 financial advisors in the US. And I think this is pretty telling of like what's the long-term outlook for something like an ETF. And it's essentially that the vast majority do see approvals and they see that as a catalyst for the market. So they do expect some sort of volatility event. Right now, access is still limited. Only 19% of advisors say they're able to buy crypto for their clients' accounts. But that being said, the client interest is strong. So 88% of advisors have received questions from their clients about crypto in the last year.
Yeah.
And there's also a stat here, I can't find one of them, but it was basically to say that a majority of clients that they were consulting with, they couldn't buy it directly through their financial advisor or their money management fund. They had to go outside and access crypto themselves. So there might be a demand for people just wanting an all-in-one solution.
Yeah.
So I think that might see a trend in that manner as well. But another massive one is just this. I guess this is probably my key takeaway. Once you invest, you tend to stay invested. So 98% of advisors who currently have an allocation to crypto for their clients, they plan to increase that exposure moving forward.
Yeah, right.
So that's where I like to think about this in the same way that gold ETF, I guess, is. So if you've got all these advisors saying, I have 1 to 5% of exposure in Bitcoin because this is why.
Yeah.
Client agrees. That's something they're going to be putting into for the foreseeable future. It's not a 1 to 2 year investment. I mean, these are time horizons of, for people to retire on, right?
Yeah.
So like that demand, when you take into account the deflationary nature of Bitcoin, the limited supply. I mean, some of the price predictions that they're making for the next 30 years don't sound too crazy. I mean, $1 million Bitcoin when everyone's buying and having 1% in their portfolio.
Yeah.
I mean, it's eventually going to get
I think
there.
Kathy Wood said 500K Bitcoin based on their calculations of like fund and fund managers allocating 5% of their portfolios to Bitcoin, going to bring in, billions, potentially trillions of dollars up. And they calculated 500,000. So that's not a number they pulled out of the air. It's analysts and researchers did those calculations to find that number. So,
and these guys, they're creating these ETFs, and there's so many because they know there's a massive opportunity.
Oh yeah.
So I mean, it's not like we're just seeing 3 or 4 just having a crack. I mean,
we're seeing 12 of them all do it at once.
Yeah,
trying to offer the most competitive fees. Like, it is a crazy time in the market, isn't it?
Yeah,
and it's exciting, isn't it?
Yeah, bit of a gold rush.
Absolutely.
Oh, mate, that was good.
I
feel like we're maybe a little bit rusty. It's our first one back after the Christmas ham.
That's all right. We'll get back into it.
Yeah.
But hopefully by this time next week, when the next episode comes out, we'll have a few ETFs approved and the market's looking a lot greener.
I think it'll be a good one to break down next week.
Oh, absolutely.
Yeah.
And then I'm keen to dive into some more altcoin research pieces.
Yeah, I think so. I think if all goes the way it should, we probably have some juicy, hopefully, insights to pass on once we start to see the market respond and digest to this news.
Yeah, absolutely. Cool. Thanks, guys. We'll catch you next week.
Awesome. Thanks.